Your 30s are a whirlwind, careers ramping up, relationships evolving, maybe even starting a family. With so much going on, it's understandable if managing your money fell a bit out of focus. But the financial moves you make or avoid in this decade could have massive implications for your future plans and retirement. Let's explore some critical money pitfalls to steer clear of, to set you up for the rest of your life. Number 1. No retirement plans. Here's the first critical mistake far too many make in their 30s. Letting big chunks of their income just earn puny interest rates that barely keep up with inflation. Over time, failing to put your money to work through intelligent, productive investing can cost you hundreds of thousands, if not millions, in missed growth opportunities. Investing can feel overwhelming and risky when you're still establishing yourself. With stories about volatility and market crashes, why on earth would you want to risk your hard-earned savings? But here's the counterpoint. Your 30s are actually the ideal season to get started with investing for two big reasons. First, time is firmly on your side. Your money has decades ahead to ride out any short-term dips and take advantage of compounding growth over the long haul. Secondly, your income and earnings potential are probably higher than in earlier years, giving you more cash flow to take calculated risks in pursuit of bigger rewards. So get started, even if it's just a few hundred per month in a broad, low-cost index fund like the S&P 500. Educate yourself, and consider working with a financial advisor to design a personalized plan aligned with your goals and risk tolerance. Then let your disciplined investments labor away in the background, gradually compounding spawning branches of generational wealth. It's an opportunity cost too great to pass up during your peak wealth-building years. Number 2. Underinsured. Consider this not impossible hypothetical. What if you, your spouse, or your kids suffered a catastrophic medical emergency tomorrow, requiring tens or even hundreds of thousands in treatment costs? Or, what if you were disabled in an accident and could no longer work and earn an income? It's not nice to think about. But the reality is that most people dangerously lack the proper insurance coverage and cash reserves to withstand those worst-case scenarios. A health or disability tragedy striking out of nowhere has the potential to completely derail your entire financial future if you're underinsured. That's why assembling a robust insurance portfolio has to be near the very top of your financial to-do list this decade. We're talking health, disability, life, auto, and homeowners. Get all your major bases covered with adequate policies. Having proper coverage ensures that a single stroke of bad luck or chance occurrence won't completely obliterate your life's financial standing. Yes, terrible things can and do happen, but you've constructed a strong force field to withstand those shocks and emergencies without wrecking your family's future in the process. As your 30s progress, it's also crucial to periodically revisit and adjust your coverage needs over time. New jobs, properties, assets, kids, all those shifts can create new vulnerabilities that require updating your policies. Number 3. Overextending yourself on a dream house. We all have visions of our dream home dancing in our heads. Maybe it's that cute little bungalow in the trendy neighborhood, a spacious suburban retreat, or a funky downtown loft. But in your eagerness to turn those homeowner dreams into a reality in your 30s, it's crucial you don't get ahead of your financial skis. Overextending yourself on a house payment you can barely afford is one of the easiest ways to derail your overall money goals and future plans. It is incredibly tempting. You convince yourself to stretch just a bit beyond your comfort zone because you convince yourself that it's also an investment. But then real life comes at you fast. A job change, unexpected repairs, medical bills. Any financial curveball can suddenly transform that affordable mortgage into a harrowing burden. Debt begins to stack up, and before you know it, you're living the unfortunate house-rich, cash-poor nightmare. Instead, buy a humble starter home well within your means. Even if it doesn't check every single box right away, make sure you have enough breathing room left over to still max out retirement accounts, build emergency reserves, and avoid those anxiety-inducing paycheck-to-paycheck cycles. Exercising that patience and discipline positions you to start building real equity. Then in a few years, after progressing into a higher income tier, you can realistically make a move up into your forever dream home sweet home. But purchasing that ideal property prematurely is how dreams can quickly derail into decades-long financial regret. Seek balance over ambition when deciding how much home is truly affordable right now. Number 4. Freewheeling without a budget. When was the last time you actually took a good, honest look at where all your money is going each month? If you're like most, the answer is probably never. Without a regimented spending strategy and budget in place, it's all too easy to develop spending leaks and bad financial habits through sheer inattention. Just think about how often you've gotten to the end of a month, paycheck evaporated, and genuinely wondered, where did it all go? That's the sad magic of mindless, untracked spending. $5 here, $20 there, and before you know it, you've blown through thousands and have little to show for it. This is why budgeting is such a critical skill set to master in your 30s. It's about taking an honest accounting of your income and all those random expenses each month, big and small. From Netflix subscriptions down to every Starbucks run and Uber trip, list it all out. With that full financial picture, you can mindfully allocate your dollars based on your biggest priorities: housing, transportation, debt payments, retirement contributions, and yes, even budgeted guilt-free fun money. No more allowing your spending to run on mindless autopilot. You're now hyper-aware of inflows and outflows, so your income can be strategically optimized to fund your actual goals and values rather than vanishing into thin air. And to give you a handle on how your current budget is doing, check out this video for 8 red flags to look out for and how to fix them.